Hey, what's going on everyone? My name is Aaron. Recently, Dogecoin hit over 10 cents per coin, marking an almost 6,000% run up over this past year. In today's video, we're going to be talking about Dogecoin and whether or not it could possibly become the next Bitcoin. If you enjoy the content, please make sure to like the video, subscribe to the channel, and let's get right into it. Okay, so to start our comparison between Dogecoin and Bitcoin, we first need to understand what Dogecoin actually is. So Dogecoin is a cryptocurrency that was created back in 2013 by two software engineers, Billy Marcus and Jackson Palmer. So the coin was actually initially created as a joke to mock the ICO craze of 2013. And an ICO stands for an initial coin offering, very similar to an IPO, an initial public offering, where a private company will go public by selling stock directly to the public. So in an ICO, it's when a coin project, a cryptocurrency project, goes public and sells their coins to the general market. So back in 2013, ICOs were popping up like crazy, and seemingly, regardless of the actual value of whatever cryptocurrency was being offered, these ICOs, these new coins, were being shot up to astronomical valuations. So Dogecoin was initially created to mock all these random coins that were coming out and being bought up blindly. So actually, when Dogecoin was initially launched, even though it was meant to make fun and make light of the speculative buying of ICOs, it also got swept up into that frenzy and ended up surging almost 300% only a couple months after launching. Okay, so the whole point of this video, can Dogecoin become the next Bitcoin? Well, as it currently stands, Bitcoin is at $63,000 roughly per coin, and that puts it at a market cap of roughly $1.18 trillion in valuation. Dogecoin, on the other hand, sits at around 11 cents per coin with a market cap of roughly 15 billion. Okay, so looking at current supply levels, for Dogecoin to get as large as Bitcoin, the market cap of Dogecoin would have to roughly 78x, putting the price per Dogecoin at $9.36. So while a 78x is absolutely insane growth, it's happened before. It's happened with Bitcoin, Ethereum, Cardano. These are all cryptocurrencies that have had these massive price run-ups. But to understand whether or not these price run-ups are even possible, we need to do a deep dive into Dogecoin versus Bitcoin and see what kind of value Bitcoin has added that has allowed for such a massive price run-up over the years, and see whether or not Dogecoin shares any of those similarities. So as we know, Bitcoin has a fixed supply. There will only ever be 21 million Bitcoin ever created, and every 4 years, the rate at which those new Bitcoin are created actually decreases. So in other words, Bitcoin is deflationary, as every year less and less Bitcoin are mined until we hit that cap of 21 million and no new Bitcoin will ever be created again. So this fixed and predictable supply has really driven a lot of people into buying Bitcoin because they see it as an inflationary hedge, almost like a gold. In fact, Bitcoin's been called the new digital gold. All this means is that people feel that by parking their money in Bitcoin, it'll not only grow, but it'll be sheltered from the devaluing inflationary effects that it would have should it be held in the US dollar. Okay, so Dogecoin, on the other hand, is completely different. Dogecoin, there are currently 129 billion Doge in circulation right now, and that will increase at a rate of 5 billion Doge per year. So Dogecoin's never going to have that scarcity value that Bitcoin has because, again, the supply isn't capped and it'll continuously be increasing for years and years to come. Okay, so despite this inflationary structure, right, where new Dogecoin will be created indefinitely, this may actually serve as a positive catalyst for Dogecoin's future growth. Okay, so to understand how this inflationary structure could actually be good for Dogecoin, we need to talk about the benefits of supply when it comes to real-world use cases for cryptocurrencies. So as it currently stands, because Dogecoin has so many coins out in circulation, you're never going to run into the potential of a supply crisis. So remember how we said Bitcoin has a very, very tight supply, only 21 million Bitcoin created? Well, that's great if you want to derive value from scarcity. But if you want to use Bitcoin as a worldwide currency that everybody can use and everybody has access to, you run this problem of a supply crisis. And again, this comes down to the fact that it's very hard to transact in something that's purposely made scarce. So think of Bitcoin similar to gold. Physical gold is great for storing value over the long term because we're confident that that scarcity is going to remain consistent, but it also makes it very hard for everybody to transact in it because, again, it's rather hard to get your hands on. So again, with Dogecoin, it's completely different. Because you have over 100 billion Dogecoin out in circulation, there's never going to be a worry that it's going to be difficult to acquire Doge or there's any kind of supply issue. So when analyzing different cryptocurrencies, you also have to look at how fast it takes for new blocks to be mined. And a block is just a big bundle of transactions that someone operating a node or a computer verifies and secures. So the faster a new block is mined, the faster your transactions can be considered verified and validated. Now with Bitcoin wasn't created to become a worldwide currency. Bitcoin, it takes roughly 10 minutes for a new block to be mined. However, with Dogecoin, it only takes 1 minute, so about a tenth of the time of Bitcoin it takes for Dogecoin to mine a new block. So in theory, this is great. It makes Dogecoin seem much more functional than Bitcoin because, again, it takes much less time for transactions to be validated. But if there is going to be this massive adoption of retailers using Dogecoin, we have to ask ourselves why this hasn't happened yet. And again, I believe this comes down to the stigma behind Dogecoin. Dogecoin is still a meme currency. It was created as a joke. The logo is a Shiba Inu, which is literally a meme. So then structurally, it makes very little sense for retailers to massively adopt this kind of currency. I mean, even look at its use cases today. Besides for being a joke on Reddit, a lot of people end up using Dogecoin for micro-tipping people online, as well as making small donations. So still these rather fringe uses because, again, it's not going to be structurally integrated anytime soon. So it's also worth noting that institutional adoption is very important when it comes to the success of particular assets. So when it comes to Bitcoin, over this past year in 2020, Bitcoin has received an extreme amount of institutional adoption. So this comes down to retail banks, investment firms, money managers, even private corporations, all have realized the benefits of having some kind of exposure to Bitcoin. So this is pretty important because with institutional adoption, you not only have billions of dollars being injected into these asset classes, but you have the advantage of greater liquidity, making it easier to sell out because there's more money being injected in, and you also have price stabilization. Remember, these firms are buying with the long term in mind. They're not buying to hold it for the next couple of weeks. These firms are buying massive amounts of crypto with the intention of holding it for years and years and years. So what you end up having is less people selling out and buying in and selling out and buying in, which helps to stabilize the price. But again, this isn't happening with Dogecoin. This is happening with Bitcoin. So the chances of multi-billion-dollar institutions buying in long-term into still what's essentially a meme currency seems rather improbable. So as a result, a significant and sustained price increase driven by institutions at this point should be considered very unlikely. Alright, so my final thoughts on Dogecoin. Is it potentially the next Bitcoin? Honestly, I do not think so. Again, for all the reasons outlined in this video, there are structural and fundamental differences in the functioning of Bitcoin that's just not the same when it comes to Dogecoin. So it's my belief that if any substantial rise in Dogecoin is going to continue to come into the future, it's going to be driven by retail investors, not by institutions. So that being said, we shouldn't necessarily underestimate the power of the average retail investor. After all, we saw with GameStop going from just a few dollars to almost $500 per share, it's the power of the retail investor to squeeze out these institutions by inspiring not only other retail investors, but just the average person to end up buying into the craze. So to put it straight, it wouldn't surprise me for Dogecoin to meme its way back up to a new all-time high, but again, I don't think it's wise to YOLO your life savings on an investment that doesn't have a sustained long-term path. So a very small exposure, something like 1% or less of your portfolio allocated to Dogecoin, not only gives you that exposure should you have a potential run up in price, but if the coin collapses back down to zero, you don't run the risk of losing your entire portfolio. And again, that effective money management, being able to effectively manage your risk and manage your different exposures, is the core principle when it comes to investing, and it's something we love to teach on this channel. Thanks for sticking to the end of the video. Please leave a like, leave a sub if you learned something new. Do you own any Dogecoin? Do you own any Bitcoin? Let me know down below. Maybe you own stocks, maybe you own bonds, maybe you absolutely hate money, in which case I don't know why you watch this video, but thank you for doing so anyway and sticking so long through all of this. I appreciate it so much. So please leave a like, leave a sub, and I'll see you in the next one.